Hey there, in this video I'll walk you through everything you need to know to get started. First, open your main chart window. At the top of the window, you'll see a button called Indicators. Click on this button to open a search box. In the search box, type Confluence Buy Sell. This is the name of the indicator we'll be using. As you type, you should see it appears in the search results. Once you see it, click on it to add it to your chart. Now the indicator is on your chart. I'll guide you through setting it up for optimal performance. First, open the indicator settings and head to the indicator section. Here you'll see several strategy options. Turn off all of them except for the Fibonacci strategy. That's our focus for this video. Next, make sure to enable Show Fibonacci Levels option while turning off the others. This will highlight the Fibonacci levels on your chart, which are essential for spotting potential support and resistance zones. Now, switch over to the Style tab. This is where you can adjust the visual aspect of the Fibonacci levels. Feel free to experiment with different colors and line thicknesses until you find a look that's easy for you to read and suit your style. Once you're satisfied with your customization, click OK to save your settings. This setup will help you clearly see key levels. Now the indicator is set up, you'll notice it draws two lines on your chart, known as Fibonacci levels. These lines are incredibly useful for identifying trends. Fibonacci levels are based on Fibonacci sequences, a series of numbers with unique mathematical properties often found in nature. In trading, these lines help us identify potential support and resistance levels, which are key areas where the price might reverse or continue its trend. When the price stays above the Fibonacci levels, we refer to the trend as bullish. This means the market sentiment is positive and the price is likely to continue rising. Traders often look for buying opportunities in a bullish trend, aiming to profit from the upward momentum. Conversely, if the price stays below the Fibonacci levels, we call it a bearish trend. This indicates that the market sentiment is negative and the price is likely to keep falling. In a bearish trend, traders might look for selling opportunities or consider shorting the market to benefit from the downward movement. Now that we have our first indicator set up, let's add another powerful tool to our strategy, the Weighted Oscillator Convergence Divergence, or WOCD for short. This indicator helps us spot potential trend reversals and confirm the strength of a trend. To add the WOCD to your chart, go to the Indicators section. Just like before, click the Indicators button at the top of your window. In the search box, type WOCD or Weighted Oscillator Convergence Divergence. And once you see it in the results, click on it to add it to your chart. The WOCD will appear at the bottom of your chart, providing a visual representation of the market's momentum. Once you've added the indicator to your chart, it's important to trail its settings to match your trading style and strategy. First, open the indicator settings window and navigate to the Inputs tab. Here, set the length to 200. The setting determines the number of periods that indicator will use to calculate its values, providing a broader view of the market trends. Next, adjust the smoothing 1 to 90. Smoothing helps to reduce noise in the indicator's signals, and setting it to 90 ensures that the indicator responds appropriately to price changes while filtering out some of the market noise. Then set smoothing 2 to 180. This additional smoothing parameter further refines the indicator signals, offering a good balance between sensitivity and stability. After adjusting the inputs, switch over to the Style tab. Here, set the histogram option to columns. This changes the way the indicator's data is displayed, making it more visually intuitive. Columns are often easier to read at a glance compared to lines or other styles. Then disable the WOCD line, a smoothed EMA, and a smoothed SMA to keep your chart clean and focused on the most important information. Finally, customize the color and thickness of the zero line. The zero line is a crucial reference point in many indicators, and by changing its color and thickness, you can make it stand out more clearly on your chart. Choose a color that contrasts well with your background and other chart elements, and adjust the thickness to a level that is easily visible but not overwhelming. Now that we have our indicators set up, let's talk about how to use them in your trading strategy. When the price candles are above the Fibonacci levels, it indicates a bullish market trend. In this scenario, look for a retracement to the Fibonacci levels. Once the pullback happens, identify the last swing high of the market. This is a key level in our strategy. When the market breaks above this swing high, it signals a potential buy opportunity. However, before entering the trade, ensure that the market momentum is also bullish. You can confirm this by checking the histogram of the WOCD indicator. The histogram should be above the 0 level, indicating positive momentum. So, once all these conditions are met, you can confidently open a buy order. And for your exit strategy, set your stop loss just below one of the Fibonacci lines. This helps protect your trade from significant losses if the market moves against you. For taking profit, set your target 1.5 times the risk of the trade. This means if your stop loss is set to 10 points below your entry, your profit target should be 15 points above your entry. Now let's get over to the sell trade rules using our indicators. When the price candles are below the Fibonacci levels, it indicates bearish market trend. In this scenario, look for a retracement back up to the Fibonacci level. Once the pullback happens, identify the last swing low of the market. When the price breaks below the swing low, it signals a potential sell opportunity. However, before entering the trade, ensure the market momentum is also bearish. So once all these conditions are met, you can confidently open a sell order. For exit strategy, set your stop loss just above one of the Fibonacci lines. Set your target at 1.5 times the risk of the trade. And if you want to always have a great confidence in trading, even as a beginner, make sure to check out the recommended video on the screen. It will help you build a solid foundation and make your trading skills to the next level. Happy trading!